Welcome to the True Wealth Project, where we talk business, real estate, and lifestyle on your way to building a wealthy life for generations to come. I'm your host, Sam Khairi, and I hope you enjoy the show. Interesting topics that you can just go on for days. All right, welcome to another episode of the True Wealth Project. I'm your host, Sam Khairi. I'm here with my good friend, Marco. He and I met a number of years ago in Alabama, in Huntsville, Alabama. That's where I wanted to buy a bunch of multifamily deals and never actually pulled the trigger. I got close to a few deals, but never actually, nothing came through. But Marco and I met. He was gracious enough to let me buy him coffee one day, and we've been connected since. So Marco, welcome, and thanks for being on, man.
Hey, Sam, good to see you. Great to be on here.
Yeah. All right, before we get started, and I've got lots to talk to you about, if you could tell us a little bit about yourself, amazing background, just the way you got here and how you got here, and it's just amazing to me. And I want to make sure everybody gets to hear your story. So if you don't mind, a couple
I
minutes.
don't I don't want to fill the whole podcast with my story, which I could. So I'll give you the 30,000 feet synopsis.
Yep.
So born and raised in Germany, um, lower middle class. Grew up in a small apartment. Did my bachelor in Germany in finance and accounting. And when I was 26 years old, had the opportunity to come to the US. Had never been to the US. Didn't know anybody in the US. Didn't speak English very well. Yeah, but just took a chance. Initially, plan was to come for 2 years, learn the language, get the work experience, and go back. From there, I started as a financial analyst. From there, the corporate career, I advanced pretty fast within the corporate career. Decided to stay 9 years into it. I came in 2002, so by 2010, 8 years into it, I became a CFO of a small, $150 million distribution company in Louisiana. So that was my first CFO gig. Advanced the career, CFO, company grew, I grew, changed jobs. In 2016, I became unemployed. The company I worked for had financial issues, was highly leveraged, private equity firm owned. When I got into it, I didn't fully understand the problems they had. However, in 2016, I found myself unemployed in Houston, Texas, and stuck with a mortgage. Actually, I stuck with two mortgages. So I sold my ex-wife and I, we sold the house. We're under contract, bought a new house, and a week after I got let go, the contract fell out of the house we were selling. And so I was stuck with two mortgages, no income, and I realized, okay, I had some savings. I was CFO, I was financially well off, but I realized at one point that cash is going to end. And
Yep.
Houston, Texas at the time, the oil price was low. It was just hard to find something comparable. So ultimately, I was unemployed for 4 months. But that squeezy feeling in my stomach really drove me to I got to find something. I got to generate some cash flow. I learned to understand the importance of cash flow. Not that I didn't know as a CFO, but I learned on a personal note, and went all into real estate. I was an accidental landlord, so I owned one rental property back from 2009. But other than that, I had no exposure to real estate whatsoever. Went to seminars, got coaching, read books, listened to podcasts, and the goal was to generate $3,000 to $4,000 in cash flow a month to have a peace of mind. Okay, so the goal was to say, hey, even if I get unemployed again, I still have $4,000 coming in that covers my mortgage, that covers my basic bills. I'm going to be okay. I don't have to stress, because I really hated the stress. You know, the
Yep.
oh, how do I pay these bills? And I was
Uncertainty
able
of
to pay them, but it's just you realize that cash is going to deplete at one point. So yeah, and from there it kind of took the snowball effect, kicked in, and I went all in. I focused on real estate, building a portfolio. Initially, it was all single family. Later on, I got into multifamily. Yeah, by 2020, I was I was making more money in real estate than I was making as a CFO. I found a CFO job again, worked as a CFO, and by 2020, I was making more money or income in real estate than I was as a CFO salary. And I
Yep.
decided to quit my corporate career. Basically, what I put in, like literally 60, 70 hours a week and advancing the career, working hard. At the age of 45, they said I quit it, and I'm done with corporate. And
Yeah.
since then, still real estate, but I'm more of a lifestyle investor, so I'm not really driven by the number of units, assets under management, how many houses. It's just not that meaningful for me. It's just more like how much cash flow do I generate? The more cash flow, the better. Always strive for more cash flow, but also I want to live by that life by design. Travel a lot, do the things that I enjoy, and
Yep.
enjoy freedom. I mean, freedom is a big deal for me. So having personal freedom and having the freedom to do what I want to do, whenever I want to do it, it's for me. It's very very meaningful.
That's
So
huge. Yeah, that's. I feel like it's a lot of folks that they get in. They have this concept that they want to live free, financially independent, whatever the term is, right? But it's like couple things that you mentioned is you had a dollar amount in mind, and whether that was going to be sustainable or not. At least you had a target in mind. But second of all,
yeah,
it's like exactly what freedom means to you, right? It's being location independent, travel whenever you want, wherever you want. And following you, I can definitely attest that you're able
yeah,
to do that, right? It's
yeah,
always good to have a home base or have a place to go to, but just the fact that you can just get up and go whenever you please. To me, that's the number one goal for everybody. Or at
yeah.
least it should be,
It's
having that location freedom.
absolutely it's the ultimate freedom. And for me, material things is just not that meaningful. And hopefully at one point people realize I realize it's fairly early in my life that it's just material things. It's just not the bigger car, the bigger house. It's just not that meaningful. But these
No, that's
experience,
right.
traveling. I mean, at one point I did a road trip from South Florida all the way to Cabo, Mexico, which is over 3,000 miles with my two dogs.
That's great. Yeah,
Stayed down there. So that just to get there took me like 3 or 4 weeks. I mean, with breaks and stops and stuff.
of
And,
course,
and
of course.
stayed down there for 2 months and drove back. So those are experiences
Yeah,
that just,
if you think about it, I mean, a lot of people, especially if you're in a corporate world, right? It's like you save up your vacation time or your PTO or whatever just to be able to take some of those trips that you're talking about, right? It's
yeah.
not many actually can take those 3, 4, 5 week trips,
Yeah,
whereas
I don't remember.
that's
Yeah, I don't remember even in my corporate job. I mean, I don't know, remember 3 4 weeks vacation, but I don't think I ever took more than
yeah,
1 week
totally.
vacation ever.
Yeah, that's right.
So
That's right. Yeah, no, it's
yeah,
that's amazing. You mentioned cash flow, and a lot of investors, what I've learned over the years, good or bad, it kind of brings a lot of different stories to mind. But people do real estate for different reasons, and they call a deal a good deal for different reasons. Whether it's the value that they're
hmm
adding, the immediate cash flow that's coming in, the potential equity growth, whether it's market or forced appreciation. It's everyone kind of gets excited about one of those things, but rarely do you get every single one on one particular deal.
right.
That's at least that's been my experience. But you mentioned cash flow, which in my opinion, it should be one of the most important ones, just because you still need to pay the bills. You still need to pay, whether it's your property bills or also your personal bills, right? How did you come about cash flow is going to be your thing? Was that just kind of like way of it was you had to replace your income? That's what
Yeah,
it sounds
I mean,
like, but
first
was
of
that
all,
always the
yeah,
case?
first of all, I mean, I have the finance background, so yeah, so I understand cash flow is important for any business, the lifeline of any business, and I understand cash flow statements, talking a little bit in financial terms, is the hardest thing to manipulate. Okay, if you look at P&L, if you look at a balance sheet, it's really not that hard to make a balance sheet look better, or not that hard to look at P&L look better. I'm not talking about anything fraudulent, but you can. There's ways to make these things look better and put stuff in different buckets and whatsoever. Cash flow statement is something that's very hard to manipulate, and from there I know cash flow is important. Cash flow is the lifeline of a business. I saw it firsthand in business failing due to a lack of cash flow. They were highly leveraged, but it's just they didn't have the cash flow to sustain the debt. So cash flow from my background, from my finance background, I know it's the most important thing. It's the first one. And this is also when you talk about these different things, because a lot of people that talk, especially like in the multifamily syndication, it's like IRR. It's like there's these different financial metrics and all these things. I can make any projection, any IRR you want, and you wouldn't even know what I was doing. It's a metric. It's a projection 5 years out. Okay, this is the other thing I learned. I've done probably, I don't know, hundreds of forecasts and probably thousands of forecasts and budgets. Not a single one ever came in the way I projected it. Never. It never happened.
Absolutely.
You do these budgets in the financial world, and it's like, hey, you do them somewhere in October for next year, and you would project that in December of next year, you somehow make, I don't know, $10 million profit. There's just no
That's
way.
Right.
This is going to come in.
There's too many variables involved. I mean, that's the same. I mean,
Absolutely,
it's in real world, right? Yeah.
So cash is what's really, and then cash flow is what's the important things, the lifeline. You have to keep the lifeline, but also is cash flow is what determines my life, determines how I can live my life. And my philosophy is the more cash I generate, the less I'm controlled by my circumstances. Okay, so if I making $2,000-$3,000 in cash flow, yes, it's gonna be hard to make a living on it. You have to make a mortgage, whatsoever. So now you're making $10,000, so life is much easier. You're making $20,000 in cash flow. You it's not that big of a deal if you stay in a nicer hotel while you're traveling or whatsoever. You want to see it. You're in Vegas and want to see a nice show. It's just not that. It's the life becomes easier. It doesn't mean you have to go crazy and spend it, but you don't have to. It's the peace of mind. So you don't have to worry about anything. You don't have oh, my car needs new tires. I need to save up for the tires or something. It's just
No, that's right.
it's just the peace of mind and easy and whatsoever. So that's why I whole focus on cash, because for me it's like, and I still today try to generate more cash flow every month. I'm not as aggressive anymore. It's not as passionate about as I used to be, but it's still one of my goals is to generate more cash flow every month.
And I feel like that's a lot more sustainable. Yeah, it's a lot. To me, that's a lot more sustainable, just because it reduces the variability of you're servicing your debt service, right? I mean, as much as possible, if you can reduce your variables in any given circumstance, I feel like it's a lot more clear, right? Whereas if you're just focusing on equity growth or IRRs and things like that, it's just like you're at the mercy of other things that may or may not come true. And if you control your cash flow,
And here's the thing: is also like for me, because a lot of people, there's nothing wrong with multifamily. I've invested in multifamily, but a lot of multifamily investors kind of look down on single family investing. It's like the entry investors, and it's not that. I mean, you cannot scale up. I've heard it all. You cannot scale up. It's more for entry investors. It's too much headache. Every single house, instead of you having one building or several buildings with 200 units, you only need one room instead of 200 rooms whatsoever. So there's all these. For me, it's urban legends because I was able to scale up in single family. I mean, at one point, I owned 50 single family portfolio, 60 family. But as it relates to cash flow, if you own 50 homes, if 2 of them are vacant, if one you have to evict, there's still 47 others generating cash flow.
That's right.
So at no point I have to worry about. I mean, yes, of course, I want all my houses to be rented any time, but if 2 or 3 are not rented and I still have to pay the mortgage on it, it's not going to be a big deal.
Yeah. So on that note, right? I mean, you mentioned and going back to as far as like 2008 even, right? So I mean, one of the things that everyone talks about is how that was a big hit to especially single family, right? And how do you see that risk? I guess like how do you see that risk, and how do you actually like, prepare yourself to for the market cycles with single family or just otherwise with real estate, right? I feel like it's
Yeah,
just preparing yourself and being ready for situations is huge, right?
it's huge, and it's huge, and you have to understand you have to study historic events, past events, and you learn from those events. So, like for instance, a single family. Let's stick with single family for a second. Yes, 2008, single family got hit, got plastered. It was. I mean, it was a disaster. Absolutely, no question about it. But what were the reasons? You have to look into what happened. Okay, so for me, the best, if even if you were born, you were, like, say you were like 5 years old at the time. If you really understand what happened, there's a movie called The Big Short. I think it's, for me, it's the
Great movie.
best explanation of what happened and how it happened.
Yep.
Okay, and it was a wild, wild west. People were building houses. I mean, there's this famous scene where actually I learned a lot from this movie. It's like one of the things is they fly from New York down to Florida just to want to see firsthand. And I think that's
Yeah.
something very important. It's just as a side note, as an investor, just don't rely on all these other people telling you this, and that. Just go there. I mean, Florida is they like, okay, Florida's going crazy. They flew down there. They go to the strip club, and this woman dancing there tells them she owns 5 houses. And they're
That's
like, how,
right.
how can you own 5 houses? You have no regular income. And then I forgot the name of the guy. She introduced him to Joey, her mortgage broker, and the guy's a total sleazeball. And this is what happened. That
Yeah,
anybody with a
that's right.
pulse could get a mortgage back then. And so is it today? Is it still the same today? Is that do we have the same Wild Wild West? No, we don't. It's much, much, much harder to get a mortgage. Much, much, much stricter underwriting. So and this is the thing. So if you understand historic events, then you read all this fear mongering and the scare tactics and all these news things. You understand, and you better read them. Like since 2020, single-family real estate market was supposed to crash at least 4 or 5 times. Okay,
Yeah, that's
2020
right.
COVID,
That's right.
gonna crash. COVID, real estate price gonna
Blew
collapse.
up. Yeah, that's right.
What happened?
That's right.
What? I'm sorry.
Yeah, it blew. I
And
mean,
and, and
yeah,
the
during COVID,
opposite
like
the
prices just went
opposite
up,
happened.
right?
Yeah, the
That's
opposite
right.
happened. Why? Because the Federal Reserve printed money, money supply was increased, asset prices go up. So if you
That's
understand,
right.
another thing you have to understand is historic events. The other one is Federal Reserve policies. Okay, if the Federal Reserve prints money, interest rates are low, money supply goes in, asset prices go up. Any inflation, asset inflation is what's first to come. Consumer price inflations always come after asset inflation. And for me, I saw this. I went crazy in 2020. I bought a multifamily 40 unit. I think I bought 8 houses in 2020. I remember in
Yeah,
April
that was a big
2020
year.
sitting at the title office, nobody there, just me and the agent, and it just was nobody closing deals, nobody doing anything. And
Yeah, that's right.
and then 2020, then there was the forbearance. Okay, as soon as the forbearance gonna end and all these mortgages become due, real estate market is gonna collapse. Forbearance ended, nothing happened. Then interest rates. And as soon as interest rates going to go up, the real estate
We're
market is
gonna have
going
a
to
crash.
collapse.
That's right.
And we went from 3% interest rates to 7%. And in
Yep.
any theoretical economic model, they were correct. But these are people sitting in New York, there's people sitting by their screens, they're not in the trenches. Me in the trenches was like, I understand, but there's a shortage of housing. I mean, any market I operate in, as soon as I rent something, it's rents in 3 days.
Yeah, that's
The
right. Yeah.
people go crazy. I don't see how price go up. And here's the thing, and I actually said that in 2022. I said a 3% mortgage is an asset. And
Yeah.
I'm
Huge.
active on LinkedIn, so I remember people laughing at me, like I have no clue how stupid I sound. I'm like, what, you claim to be a CFO, ha 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 ha. I'm like,
The
no, you
keyboard
don't
warriors.
understand. Yeah, it's like if inflation goes to 8, 9, 10%, and you have a 3% interest mortgage rate, you're getting paid for that mortgage.
To
Okay,
own that asset. That's right. Yeah.
your mortgage is probably more valuable than the house.
Yeah, that's right.
And
That's right.
people in our so then over the next 2 years, nobody was selling houses because there's 3% mortgage. They didn't want to lose
Yep.
that, and yeah, it held true, but
Man.
it was for me being in the trenches again, seeing with your own eyes. I was very confident that the home price would not collapse. Then the next thing was affordability. Okay, so the it's always a new flavor. So the new flavor is now affordability. Home prices are way too high. People cannot afford anymore. Home price is going to collapse. Here we are. Home prices don't go up much right now, but they're still pretty stable, And now interest rates are
Yep.
coming down, so I don't expect it to change anything. It's just, yeah,
So
it's very important to build your own, have strong convictions, and to build your own opinion. But you
yeah.
build your opinion by understanding historic events, understanding the impact of Federal Reserve policies, government policies, and being in the trenches and being put your own eyes on things. That's how
Yeah, no,
I
that's right.
think you prepare
That's right.
yourself to be a good investor.
Yeah, and I will add to that if you would. I mean, those are all amazing points, and I feel like um, everyone has an idea of what we're talking about, but it's just that I think fear mongering kind of takes over at some point, and it
Yeah.
just kind of blinds you, right? It's easier to just not do anything and then make an informed decision as opposed to just not do anything, right? Whereas I also feel like if you know about debt, how to use debt properly, and also if you understand taxes, I feel like these are the things that are economy. I mean, you have I love your shirt, by the way, capitalism. That's how we thrive, right?
Yeah.
Yeah, it's like just the U.S. economy, knowing the way money works and knowing how to leverage that skill, that knowledge is huge. We cannot go wrong with, yeah, you might be wrong at times, right? But it's a risk that you're willing to take. But many people don't understand debt and or taxes or how money works in this
Yeah.
country.
And I 100%, and we can go into the conspiracy part where like how much of that is by design and how much is just
Yep,
by accident. People just don't know. I mean, why are we not learning in school how taxes work, how the tax code work? Why don't we learn in school the difference between good debt and bad debt? Why don't we learn in school how to open a checking account, how to get a mortgage? You know, Instead, I mean, it's nothing wrong with the stuff we learn, but how much of what you learn in school is really applicable for work and your life, later on,
that's
but
right.
the things that are really you do every day, investing your money, you make some money, how do you invest it? How do you keep some of your money, but they don't really teach that because, I mean, it's a government run institution. So why would the government tell you how you pay less taxes, So
That's right.
it's so anyways, I don't want to get too much into this, but the question is always how much of that's by design. But it doesn't, in the end, it really doesn't matter because it's up to us to educate ourselves. Yes. Okay. I mean, yes,
Yeah.
I went through public schools, I went through public university, and um, most of the things I learned was not very valuable. But when I started educating, 2016, when I started investing in real estate, I started educating myself on these things you talk about. I was a CFO, I thought I had it figured out. I understand. Oh, I pay off my mortgage as quick as possible. I'm not stupid. That was my
Right. Right.
mindset, which by the way is not a wrong mindset. Okay, it's just a suboptimal mindset.
Yeah.
It's not wrong to
Absolutely.
pay off your mortgage. There's a lot of people struggling with paying their mortgage. A lot of people over leverage with their mortgage. So having that mindset, I want to pay off my mortgage as quick as possible, it's not a bad thing. But
That's right.
if you learn about inflation and if you learn the difference between good debt and bad debt, good debt is debt on appreciating assets, on cash flowing assets, then you understand, okay, there's a better way, and the funny thing is when you look at what the wealthy people do, there's billionaires taking out mortgages. Why would a billionaire take out a mortgage? I mean, that sounds kind of crazy, doesn't it? I mean, if you ask Dave Ramsey, he would say the guy's an idiot. He has
That's
he has
right.
$5 billion in the bank, and he takes out a
That's right.
$50 million mortgage on his mansion. That's an idiot, you know. But the
Yeah,
guy
no, that's right.
is pretty smart, probably. You know, he probably
They
knows what he's
figured out. I
doing.
mean, that's once you know that you can take out a mortgage at 3, 4, 5%, and but you know you can make 10, 15, 20% on that money, like that's the difference. That's the difference between regular folks and the people that get
And,
it,
and, and
have access to
it's
opportunity.
even more than that, Sam. It's not it's yes, it's the arbitrage. You can make more money return as what you pay in interest, but it's also when you understand inflation, you realize that value of that debt is actually diminishing without you
Yeah,
doing
that's right.
anything. You know, it's like, okay, I
Yeah,
have $1 million
completely.
mortgage, but in that's still $1 million mortgage next year. But in real terms, that million is actually $950,000. On paper, it still says a
Yeah,
million,
fantastic. That's right.
but
That's right.
value-wise, what denominated in dollars, it's actually 950, whatever the inflation rate is, you know.
Yeah,
So there's two angles to it. One is you're correct, absolutely. There's an arbitrage effect of you generating more income, but the other part, what the wealthy understand, is inflation helps you to reduce your debt liability, and
yeah, and
especially
and I
if it's a cash flowing asset, somebody pays that debt for you.
That's exactly right. No, that's
You
exactly
know?
right. And I think inflation is one of the last things that everybody looks at. And if unless you look at 10, 20-year kind of average, right, it may not impact you immediately, right? But it's like if you think about how much things used to cost 10 years ago, 20 years ago, it's like
Yeah,
then it becomes very clear, right? Just the effect of
yeah.
inflation.
And
Um,
this is a good point you bring up. So it's the long-term vision. You know, anything I buy
yeah,
real estate wise, I want to own for the next 10, 20 years. I don't know anybody who got wealthy by flipping houses. I know a lot of
that's right.
rich house flippers. None of them got ever wealthy. You know, you really build wealth by hanging long term to your
Yeah,
assets.
that's right.
And to your point, you might make mistakes. And yes, you might make mistakes on the tactical side, on this deal or that deal. Um, but when you look at over 20 years, it might not be so
Yeah,
bad.
it's just a
And
blip on the
and
radar. Yeah,
yeah, and actually, for me, and it comes back to be in the trenches learning it. I learned that actually from my first rental house. I bought that in Huntsville, Alabama, in
yeah,
2008, June 2008, and for $180,000. If you pick a month in the last 50 years to buy a house, June 2008 was probably one of the worst you can pick. You know, it was just before the collapse, just
yeah.
before
That's
Bear
right.
Stearns, all
Peak
that
of the
stuff.
market. Yeah,
That house was worth 130 by 2010. So I paid 180 2008. 2 years later, it was worth 130. However, it was rented. Somebody paid the mortgage for me. I didn't know any of the things I do today, the scaling up, whatsoever. It's
yeah.
rented. Somebody pays the mortgage for me. I was okay. You know, I was not worried about it. It was a good property. It rented within a week. I had the same renter in for like 5 years. I was just let it ride. That same property last year got appraised for $340,000.
Just by way of just holding. Yeah,
Mhm.
that's the power of market appreciation. It's just the holding that asset long enough. I mean, it's couple that with the shortage
Absolutely.
of housing we have. It's someone else is paying down your debt, right? It's that's the name of the game.
Mhm.
How much of
Agreed.
how much of what you do, or we talked about a bunch of things that to keep in mind. How much of what we are doing and what we're thinking about has to do with policies, especially policies related to, when it comes to elections, right? Every 4 years, we have an election where there's potential policy changes that could affect the way we do business, especially in real estate. Recently, for example, the bonus depreciation, right? The topic of bonus depreciation. It's been in and out of the news. Recently, it was struck down, and there's always going to be changes, right? How much of that do you take into account when you're looking at whether it's a property or an area, or just generally speaking, like going into a particular state? Does that ever come into play?
Yeah, but I don't necessarily president to president. I think it's more looking at it on a macro level. You know,
Yeah,
speaking of states, okay, there's states that are more landlord friendly, and there's states that are more tenant friendly. I only invest in states that are more landlord friendly. That doesn't make me. I know there's people on the left side of the spectrum. Oh, you're like a slumlord, taking care of the tenants. No, I take great care. In any house I own, it's unfortunately I cannot show you a picture. They're beautiful homes. I take a lot of pride in my
Yeah,
homes. I have tenants that rent my house for 7 years. Same tenants. Okay, the
that's great.
people rarely leave my house because they love my house. So I'm a I would consider myself a nice landlord. Okay, but I still will only invest in landlord friendly states. Okay, and I will not invest in states where, or potentially, if somebody decides not to pay the rent anymore, and then I'll have to wait a year or a year and a half for that person to leave my property while I still pay the mortgage on that property. Why I
Yeah, that's
put
right.
$30,000 into that property to renovate it,
Yeah,
so
that's right.
I look more at a macro level, is and obviously there's directional things. I mean, Trump, I'm not a Republican, but there's clearly, with Trump, you have to admit there were a lot of tax benefits that came with it. A lot of the bonus depreciation. Changing the capital gains taxes. It's just there's a lot of benefits that come with it, and then you have to understand the implications and whatsoever. So I take it into account, but it's not the main driving force because things can change. If you do
Yeah,
all your
that's right.
decisions based on that one president right now, what this guy's doing, the next guy comes in 2 or 3 years later and does the opposite. And okay, well, now
Yeah,
my whole
that's right.
game plan is going to fall apart. So I think
That's right.
it's
It's
understand.
it's so interesting.
Yeah,
Yeah, it's so interesting to me how people just predict a bunch of stuff based on politics or policy, like even policies and things like that. And like you were mentioning earlier about the how the market was going to crash so many different times, and even thinking about the interest rates were supposed to drop 6 times this year in 2024, right? I mean,
yeah,
thinking about like
yeah.
in December or January, it was like
And,
no one can predict anything.
and
I don't
I
understand
know,
why we're going
yeah, absolutely. I know people who don't buy houses or haven't bought houses or whatever because they're waiting for the interest rate to drop. It's just always the
right.
interest rates are too high, home prices are too high. They said
Yeah,
3 years ago, home prices are too high. And here we are. I don't know, it depends on the area where you live, 30-40% appreciation since,
that's right.
so you missed out on that whole thing. Oh, things can crash. Okay, I just got 40% appreciation. Even if it drops 10%, 15%, I'm still gonna be okay. But and
That's
I
right.
and I got cash flow for the last 4 years, so I'm gonna be okay.
Yeah,
But like you said, there's a lot of people that get this ace to fear. I mean, one thing we have to understand: fear sells. So the way the human brain is wired is we're way more receptive to negative news and to fear than positive
completely.
news. And the
No,
media,
completely.
these fear mongers, these gurus, all these people, they all understand that. We're just more
Yeah,
receptive to negative news.
yeah. It's
And
easy to just look at the and it goes the same with when the market is hot, right? It's like certainly I fell into that trap as well, where when the market was really doing amazing, it's like it's the fear of missing out. It's like I need to get in, I need to get in, and then
yeah,
I did get
yeah,
in. Luckily, we're okay. But on the flip
yeah,
side, when the news is no one's buying, prices are dropping, or they're going to drop,
yeah.
or volume is down, and all of that, right? But it's just like, does that mean you should stop? Does that mean you should? Is that what you listen to? Do you basically just follow what everybody else is doing and just follow the herd, or do you? That's some of the things we talked about. Do you
Yeah.
do
And,
you
and
educate yourself? Do you understand how everything works and make an informed decision that works for you?
and you have to think about it, Sam. If you do the same decisions, the same financial investments like the masses do, you're gonna have the same results
That's
as
right.
the masses do. And how are the
100%.
masses doing? How are they doing?
100%.
They don't all parade.
Yep.
They're all driving around in Lambos, and they're all having the house. I mean, how are the masses doing? So they're not doing
That's
too
right.
well. The masses. I mean, what is it? 60? I don't remember the exact number. 65% of Americans live paycheck to paycheck. Which is it's a sad number.
Yeah,
but those are the
100%.
masses, you know. So
Yeah, no, that's right. Even though we're talking about the market is strong, but look at personal credit card debt, and obviously inflation has killed everybody's income hasn't gone up as much as inflation has in the past however many years. So it's when you think
yeah,
about these things, they compound, right? I mean, if that's how you want to continue living and not even pay attention to how you can increase your in our case, cash flow. How do you increase your net worth? I mean, you can't save your money to wealth, and I keep saying that. And with the diminishing of your dollar of our dollar, like inflation is eating away on your money, your income's not going up, and how are you supposed to get ahead? That's one thing. That's one thing people don't understand.
yeah. No, the vast majority doesn't understand, and all we can do is we can raise a flag, but ultimately, I think it's up to ourselves to do something with the information or not. Also,
Yeah, that's right.
it's up to the individual. That's what
Yeah,
I
that's right.
strongly believe in.
Yeah, I'm good with being I don't want to say the opposite of the masses, but definitely making my own decisions and not
Yeah.
relying on anyone or any entity, including the government, to save me at some point or any point. If I
Yeah.
if I fail along the way, great. I'll deal with the consequences, but
And
hope
this
is
is
that
the
we're going to do
thing.
much better then.
Yeah, no, I mean accountability, responsibility, and I think this is like a lot of people look for this, oh, protect me and this, and government taking care of that and whatsoever. It's like you become a better person, better investor, but by taking chances and you fail and you learn from that stuff. I mean, I'm a
Yeah,
better
absolutely.
investor because of the mistakes I've made along the way.
That's right.
I'm a
And
better
that's
investor because I was unemployed in 2016, because I know how it felt not having the cash flow coming in. So
yeah,
coming to this
that's right.
country in 2002, I mean I didn't know anything. I mean it was hard. It was the first 2 years was extremely hard.
That's right.
But it made me who I am today. So, and this is what if you take, nobody helped me. There was no, this, I don't want to get into all this immigrant stuff, but when I came, there was no like free stuff whatsoever. It
Yeah.
was, anything I had to work for. And I came
No,
with
absolutely.
nothing. And,
Yeah,
but it
absolutely.
shaped me to who I am today. I'm glad it was hard, but I'm glad I went through the experience.
Yeah, for sure.
So I think a lot of it comes with taking responsibility, taking risks, and it just makes you a better person, a better investor, a better human being.
Yeah, absolutely. I love this conversation. Like I said, I could do this all day. We gotta get some more of those shirts printed, and maybe we can give it out on the podcast, and
Yeah.
um,
Well, yeah,
it'll
you
be
should start a thing. Give that to
it'll be fun.
or
Yeah,
your guests have to wear it as part of it or something, or you give it to each guest.
yeah. I bet it'll sell out in 5 minutes. All right,
Yeah,
before I
no,
let
it's
you go, and we tried to keep
yeah,
it short, but like I said, I could talk to you for hours. All right, what's
yeah.
the vision for the future? What's the goal? I know real estate is our end goal, and we're going to continue to do this. But is there anything beyond that? Is there anything bigger than that? I guess that you're looking at or looking
I mean, for
for
me, the
in
biggest
life?
thing on an individual level is I want to be the best person possible. I want to live my life, the best life. I like to travel. I like to experience. I value experiences way more. That's for me on a personal level. On a greater society level, I'm very active on LinkedIn. I try to educate as many people as I can. I try to spread the word. I try to help people. I coach people. I consult with people. I mentor people. Try to spread the word. But we coming back to the masses, it's just a lot of people just don't understand, and I came to the conclusion that you cannot save them all. So
Yeah, that's right.
it's you have to really focus on the ones who want to be helped. You want to focus on the ones who understand what you're talking about, and I think it's important because I mean things that get crazier. Well, I don't care which side of the political aisle you stand. Things got crazy. If you look where are we today compared to 20 years ago when I came to this country, it's a different
Yep.
country. Okay, and
Yeah, that's
in
right.
my opinion, it's only going to get crazier. Government spending is not going to end. Devaluing of the dollar is not going to end. Even if Trump coming into power, he increased the deficit just as much as the previous guy. So the government, it's a never ending process. So surround yourself with like-minded people. Be prepared.
Yeah,
And inflation. Yes, inflation is coming down a little bit, We haven't seen anything yet. It's going to get way worse when it comes to inflation. Of course, all this government spending, they have to increase the
Right.
money supply. It will get much crazier. And so you have to understand, put your money in as inflation, best protection against inflation is hard assets. So that's what I do. I buy
Hard assets. That's
houses,
right.
real estate, ideally cash flowing, precious metals. You can debate if Bitcoin is a hard asset or not. I consider it a hard asset. Others don't. I buy Bitcoin. I buy precious metals. I buy real estate, and
It's about just protecting yourself and being ready for any situation, right? I mean,
yeah,
it's not.
because
Yeah,
yeah, because here's the other thing: when people are like, oh, housing prices are crazy, I strongly believe housing prices will go up way more than they are today. You know, it's
I could
just
definitely see
with
that.
all this money printing, all this inflation, asset inflation, stock price will go up, houses will go up. It just it's just the way it
Yeah,
works. It's just what things, and there will be
I
an end
don't
at
see
one
an
point.
end to this.
Yeah,
Yeah, I was gonna say that I don't see an end, but there's got to be an end at some point. But
there will be,
I
but
don't
I don't
see it
know.
in
So
our.
people 30 years ago said, "Oh, we have too much government stamps too high, and everything's going to collapse." And here we are, 35 trillion in debt, and we're
That's right.
still functioning. You know, so I think it's just be prepared, be ready, and live your best life possible. That's how I look
Yeah.
at it.
No, it's amazing. I love your outlook on life and just the way you approach things. It's even if you could change one person's mind or life for the better or for different. I think it's one of those things where like on LinkedIn, I could definitely see somebody initially kind of reading the post. You're like kind of like stop is like, what is this guy saying, right? And the more you read it, it's just like, okay, now I understand. Or it's like this guy's just full of it. I'm just gonna, and
Yeah,
then there's those
yeah, and
that
here's the
just
thing.
like
This is, I mean, talking about my LinkedIn posts, I'm pretty active there. Got a good following. There's a lot of
it's amazing.
people who I actually made a post about it not too long ago. How I get ridiculed, you know, and stupid and this and that, and what I don't understand,
Yeah.
and negative and insults, and I don't. It doesn't bother me. I mean, it bothers me. I wouldn't. Not bothering is not the right word. Of course, if somebody insults you, it has never. But it doesn't
Yeah.
change anything. You know, I don't have no interest with these people. I have nothing in common with them. I will not change them. I can start debating with them over 100 comments. It's not going to change a thing. You know, so we just move
Yeah.
on. You
No, that's right.
focus on the people
No, I love that.
who are like minded. You know, so
Yeah. Yeah, absolutely. Just save the energy for the
yeah,
right
save the
crowds.
answer for the bigger
Um,
things.
all right. Last thing, if somebody wants to get in touch with you, get a hold of you, what's the best way?
Best way is LinkedIn. I'm on LinkedIn daily. I post daily. Marco Pfeiffer on LinkedIn, and that's probably the best way. Just shoot me a message. Love to connect with people if I can help in any way.
I
Yeah,
love
that's
that.
probably the best way.
Yeah. And for everybody listening, watching, Marco's the man. At a minimum, you got to follow his content on LinkedIn. You'll definitely learn something
I
over the course
appreciate
of a
that.
week and 2 weeks. But yeah, appreciate you being on. We're gonna do
Yeah,
this again, I'm sure. I'll
yeah, I would
definitely
love
reach
to,
out and
Sam. Always good talking to you. I appreciate it.
appreciate it. Thank you, Marco. Thanks for watching today's episode of the True Wealth Project, and I hope you enjoyed today's guest as well. If you want to catch more of these episodes, be sure to like and subscribe us on YouTube as well as other podcast platforms. You can also get in touch with me by following me on Instagram at official Sam Khairi, or you can send me an email at sam@aftocapital.com. That's sam@aftocapital.com. See you soon.